The Federal Allocation Committee meeting has announced the disbursement of 2.22 trillion naira of the 3 tiers of government as revenue allocation for August 2025. The allocation, which was drawn from a gross revenue of 3.63 trillion naira, was disclosed in a statement issued by the Ministry of Finance following the committee meeting in Abuja in September. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kikelomo Okere. The Federation Account Allocation Committee, which was chaired by the Minister of Finance and Coordinating Minister of the Economy, Wale Edun, reveals that the allocation inclusive of gross statutory revenue, value-added tax, electronic money transfer levy, and exchange difference, the federal government received 810.05 billion naira. The state received 709.83 billion naira, and local government shared 522.23 billion naira. FAC says oil-producing states received 183.01 billion naira as 13% derivation. The committee also says 124.84 billion naira was set aside as the cost of collection, while 1.28 trillion naira went to transfer, interventions, and refunds. The communique further says the gross revenue available from the VAT for August was 722.61 billion naira against 687.94 billion naira distributed in the preceding month, resulting in an increase of 34.67 billion naira. From that amount, the sum of 28.905 billion naira was allocated for the cost of collection, and sum of 20.811 billion naira given for transfer, intervention, and refunds. From the distributable revenue, the federal government got 100.93 billion naira. State received 336.45 billion naira, and local government got 235.51 billion naira. Also, the committee says gross statutory revenue of 2.83 trillion naira received for the month was lower than the sum of 3.07 trillion naira received in the previous month by 231.91 billion naira from the amount. The sum of 94.58 billion naira was allocated for the cost of collection, and a total sum of 1.26 trillion naira for transfer, intervention, reform. Out of the remaining balance of 1.47 trillion naira, the federal government received 684.46 billion naira. States got 347.16 billion naira, and local government received 267.65 billion naira, while 179.31 billion naira was given to oil-producing states as 13% derivation revenue. The committee says from the EMT of 33.68 billion naira, the federal government received 4.85 billion naira. States got 16.16 billion naira, and local government got 11.31 billion naira, while 1.34 billion naira was allocated for the cost of collection. The communique also says that 41.28 billion naira from exchange difference was distributable to the federal government, with 19.79 billion naira, and states got 10.04 billion naira, and local government area got 7.74 billion naira, while the oil producing state received 3.70 billion naira. In addition, FAC says oil and gas royalty, VAT, and CET levies increased significantly, while petroleum profit tax, import duty, EMTL, companies in tax, and excise duty recorded decrease. According to the communique, the total revenue distributable for the month of August 2025 was drawn from statutory revenue of 1.47 trillion naira, VAT of 672.90 billion naira, 32.33 billion naira for ENTL, and the sum of 41.28 billion naira from exchange difference, bringing the total distributable amount for the month of 22 to 22.22 trillion naira. The Federal Inland Revenue Service has issued a directive mandating strict compliance with withholding tax regulation on interest earned from short-term securities to avoid the imposition of penalties. The notice signals by FIRS Executive Chairman Zach Adedeji is addressed to banks, discount houses, stockbrokers, corporate bond issuers, primary dealers, market makers, financial institutions, government agencies, tax practitioners, and general public. The directive reinforced provision under Section 78(1) and 81, Section 1 of Companies Income Tax as amended, and 2004 Withholding Tax Regulation. It stipulates that tax must be deducted at source from all interest payments on short-term investments at the time of payment. Regulations on interest earned from short-term securities to avoid the imposition of penalties. The FIRS clarified that the individuals or entity from whom the tax is withheld is entitled to a tax credit equal to the amount remitted, except in the cases where the tax deducted is deemed final. The provision ensures transparency and accountability in the tax process, while also safeguarding the rights of taxpayers. Importantly, the directive exempts interest earned on bond issued by the federal government from withholding tax, in line with the existing tax incentive designed to promote sovereign debt instruments. Short securities covered under the directive include, but are not limited to, treasury bills, government bonds, promissory notes, corporate bond, financial papers, and bills of exchange. These instruments are commonly used by institutional investors and corporations for liquidity management and short-term financing. The FIRS emphasized that all relevant interest payers must comply with the circular to avoid penalties and interest charges as stipulated under Nigerian tax law. The move is part of the broader effort by the agency to enhance revenue collection, improve tax compliance, and ensure equitable taxation across financial markets. This directive comes amid ongoing reform aimed at strengthening Nigeria's fiscal framework and expanding the tax base by enforcing timely and accurate withholding tax deduction. The FIRS seeks to bolster government revenue while maintaining confidence in the financial system. The federal government has announced that it has disbursed a total sum of 330 billion naira to 8.1 million households across the country under the National Social Safety Net program, aimed at cushioning the harsh effects of economic reform on Nigerians' poorest and most vulnerable citizens. This disclosure was made in Abuja by the Minister of Finance and Coordinating Minister of the Economy, Wale Edun, after a review meeting of the Special Presidential Panel on Social Investment inaugurated by President Bola Ahmed Tinubu in February. Edun explained that the program, which experienced delay earlier in the year, is now firmly back on track following the successful integration of biometric data through the National Identification Number. This integration, he says, is crucial to ensuring transparency, curbing leakages, and eliminating political interference. According to the minister, out of 19.7 million households captured in the National Social Register, representing about 70 million Nigerians, 8.1 million households have already received at least one tranche of 25,000 naira stipend. Some beneficiaries have received 2 or 3 payments depending on the verification outcomes. He noted that an additional 2.2 million households were paid in the last cycle after their bank verification and NIN were successfully validated. Edu attributed earlier delay to lag in NIN enrollment, but stressed that all outstanding payments will be concluded before the end of 2025. Edu pointed out that the program scope had been expanded from an initial target of 15 million households to 19.7 million, underlining the government determination to shield low-income Nigerians from the impact of subsidy removal on currency reform. He stressed that the digital payment system through bank accounts and mobile wallets was robust, sustainable, and immune from political melding. Providing further details, the National Coordinator of the National Social Safety Net Coordinating Office, Fumi Olotu, reveals that about 10.2 million NIN had been collected during the household visits, out of which 9.6 million were validated by the National Identity Management Commission. She explained that only validated beneficiaries were eligible for payment, thereby ensuring the integrity of the process. Olotu further disclosed that President Bola Ahmed Tinubu had issued an executive order making the NSR the sole database for all government intervention going forward, thereby eliminating duplication and ensuring that interventions are based on verified data. She emphasized that the NIN integration, though initially responsible for delay, is necessary for accuracy and long-term sustainability. Data from the Presidential Panel on National Social Investment Program shows that cumulative beneficiary rose from 1.78 million households in November 2023 to 8.11 million by August 2025. The data further indicates that 61% of beneficiary households were female-headed, while 39% were male-led. By age, 36% of beneficiaries fall within 51 to 65 years bracket, followed by 30% in the 21 to 35 years range. A regional breakdown reveals that the Northwest received the largest share with 3 million households, accounting for 72% of disbursement, while South accounted for 28%. The International Monetary Fund in June 2025 report had raised concern over the lack of robust safety net to shield poor Nigerians from the adverse effects of reform. While acknowledging the Nigerian progress, the IMF warns that widespread poverty and food insecurity pose a risk to inclusive growth if savings from subsidy removal were not channeled into the social protection. The fund urged the federal government to ensure that resources freed up by reforms are directed into priorities investment that directly benefit citizens. With NIN integration, expanded coverage, and an executive order mandating the NSR as single database for intervention, stakeholder says Nigeria is laying the groundwork for a permanent social protection architecture. Edu added that the program represents a shift in economic management philosophy, with the disbursement ongoing and structures in place for validation. The government insists that the government will continue to serve as a buffer for millions of households navigating the effect of economic reforms. Nigerian crude oil production fell again in August, reversing gain that had pushed the country above its OPEC quota for these 2 consecutive months. This was against the backdrop of basking in euphoria of increased oil output achieved in July. Fresh figure from the Organization of the Petroleum Exporting Countries, as obtained from the government, shows that Nigeria pumped an average of 1.43 million barrels of crude per day in August, down from 1.507 million barrels per day in July and 1.505 million barrels per day in June. The decline means Nigeria fell about 66,000 barrels per day, short of its expected quota of 1.5 million barrels per day in August. This comes after exceeding the target in both June and July, when production stood slightly above quarter level. Nigeria's August performance marked a sharp drop of 73,000 barrels per day from July. The setback interrupted what the government had described as a major achievement of the President Bola Ahmed Tinubu's administration and a promising recovery, as output has averaged 1.47 million barrels per day in the first quarter and 1.48 million barrels per day in the second quarter. The country's average crude production met the OPEC quota this year in January, June and July. January has the highest output with 1.54 million barrels per day. Crude production dropped to 1.46 million barrels per day in February. It worsened in March, falling to 1.40 million barrels per day. The output rose again in April to 1.48 million barrels per day and slipped in May to 1.45 million barrels per day. But with the increase recorded in June and July, the government says it is set to achieve its ambitious 2 million barrel per day oil output. Speaking recently about the project's 1 million barrel per day initiative launched in 2024, the Chief Executive Officer of the Nigerian Upstream Petroleum Regulatory Commission, Gbenga Komolafe, says Nigeria is actively ramping up crude oil production by reactivating dormant fields, fast-tracking regulatory approvals, and enhancing operational efficiency across the upstream value chain. Komolafe maintained that the current administration has succeeded in raising crude oil concentrated from 1.4 million barrels per day to 1.7 million barrels per day. He says the recent increase in oil production by about 300,000 barrels per day confirmed the government's effort to achieve the ambitious 2 million barrels per day output. However, the sharp decline recorded in August is a setback to recoveries of the previous months. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Points, where we extract the Nigerian economy and the government's policies. The Nigerian currency maintained upside against the American dollars as the United States Central Bank makes an important interest decision later. The US dollar plummeted to 1,484 naira on Tuesday in the Nigerian official foreign exchange market, which was 13 naira higher than 1,497 naira to a dollar quoted on Monday. However, the naira traded at 1,520 naira to a dollar and minus 1,530 naira to a dollar band at the fiscal black market in Nigeria business capital at the midweek trading session. Nigerian Bank's Naira debit card dealing with FX transaction had also led to a drop in FX demand, providing Naira bulls with enough ammunition to hold below 1,500 naira to a dollar support line. The Naira is experiencing a period of stability 1 year after steep decline against the dollar. Investors in the Nigerian Exchange Limited gained 310 billion naira at the close of trading on Wednesday as the benchmark all-share index rose to 0.35% The market capitalization of listed equity climbed to 89.9 trillion naira from 89.59 trillion naira recorded in the previous session, driven largely by the gain in blue chip stocks across the oil and gas, consumers goods, and banking sector. At the end of the session, all share index advanced by 489.43 points to settle at 142,036.23 points. This translates to a one-week gain of 1.19%, a 4-week decline of 0.4%, and a year-to-date return of 38%, underscoring the resilience of equities market despite recent volatility. Markets activities also improved significantly, with investors trading a total of 1.004 billion naira shares valued at 24.65 billion naira in 23,272 deals. This represents a 142% improvement in volume and 90% rise in turnover compared with the previous trading day. However, the number of deals declined by 8%, reflecting fewer but large value transactions. In terms of sectoral performance, the oil and gas index surged by 2.59%, while the consumer goods index appreciated by 0.9%, bringing their year-to-date gain to minus 8.44% and 91.33%, respectively. The main board index rose to 0.43%, the pension tax gained 0.4%, and premium index advanced by 0.18%, among others. On the flip side, Guinea Insurance topped the losers chart after its sharp price shed 9.7% to close at 1.49 naira per share. Cornerstone Insurance followed with a decline of 8.68%, and a Legend Internet dipped by 7.27%, while Deep Capital Management and Trust lost 7.06%, among others. Overall, market breadth closed negative with 32 losers against 26 gainers, even as the market positive close reflected renewed investors' appetite for large cap stock and select mid-tier equities. Analysts noted that the rebound in oil and gas as well as consumers goods stock contributed significantly to the 310 billion naira gain. All right, this is where we call it a wrap of Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms at Global TV NG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.